My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Do you want to make friends? I'm just trying to make a little money. My job is not just entertain, but educate, teach, put in context. Call me, 1-800-743-CNBC. Tweet me, @Jim Cramer. In bull markets, people find reasons to buy everything, even if they're for the wrong or at least antithetical reasons. And that's how you get the S&P and NASDAQ up 1.22% and 1.15% respectively, closing at 52-week highs, and the Dow surging 429 points, not far behind them. Today's session illustrates that we still have a normal, run-of-the-mill, garden variety bull market going, despite tough talk from the Fed. It's clearly not done raising rates. The Fed can't stop the thing. All right, the bullish setup. Let me explain. First, we have an important event. In this case, the Fed's meeting yesterday. There are tons of investors who fear any event like this, because there always could be a negative surprise. So they just wait and wait and wait. They don't do anything until they see what is said. Yesterday, there was also another camp that completely freaked out at what the Fed said during the press conference and blew out of a huge amount of stocks, sending the averages lower. Once the meeting was over, though, and we have a little more time to process what was really said, other sideline investors get anxious and they find reasons to put their money to work. And that's what happened today. Oh, they got the reasons. Or maybe even they make up the reasons. And today, the purchases, well, let's just say they were done with reckless abandon. I say that because, again, the animal spirits right now control the buyers. And they can just as easily craft a story about buying any stock they want. So let me give you some of the storylines I saw, ones I embraced today, with the caveat being that even a bull like me is taken aback by the strength we got in the wake of what's already been a terrific run. First camp of buyers I saw, okay, yesterday the Fed said it was going to have to talk tough, right? Wasn't that the whole theme of what we heard? Because inflation's still hot. So we might have several more rate hikes to go. But the buyers in this first camp, guess what they think? Buy. They think Jay Powell is bluffing. They think he's bluffing. They think Jay Powell won't do what he says. He won't raise rates to the point where he's crushing the economy in order to save it. They figure the Fed's simply talking a tough game, that its bark is worse than its bite, and it's not merciless enough to truly bring on the pain.
The house of pain.
These buyers went to work picking up industrial companies that would be in much better shape if the Fed blinks and truly does stop tightening. When an economy is unimpeded and allowed to run free, and you buy stocks of companies that make things and do stuff, you've got to remember the most important one, probably the one that typifies, exemplifies, I don't know what the best way to say it, is Caterpillar, which is levered to growth of all kinds. Cat does well if there's road construction, and we have about $1 trillion of the road construction coming thanks to the flood of infrastructure spending from the federal government. Cat does well if there's more oil drilling, and if the Fed's truly bluffing, then inflation could flare up again, then maybe we will need more oil and gas. That, at least it'll certainly raise the prices for them. Cat does well if China does well. We know there's still one more Chinese stimulus package replete with lower rates, albeit smaller cuts, that could lead to projects that need Caterpillar tractors. You need the machines to mine for copper and other non-precious metals. And you need the machines to build all those new data centers for artificial intelligence, not to mention the new domestic semiconductor foundries that will make us less hostage to China and Taiwan. I like to use Caterpillar as an example, not just because we own it for the travel trust, but because normally its stock gets hammered when the Fed cracks down on inflation. This time, though, there are enough people who no longer believe the Fed's tough talk. They're convinced the rate hikes are really done, that it wasn't just a pause, wasn't just a skip, and therefore you got to buy Cat for the long haul. And that's how this stock at $206 a few weeks ago can close at $247, up $4.37 just today. Of course, there's also a considerable bet against Cat because the bears think the numbers will prove to be too high, given that we're heading into a recession. But they're being overrun, and they may have no choice but to buy back their short bet against Cat before they lose their year on this one. Oh, there were many Cats out there today, though, that were running free. But we are seeing too many shorts, and we're seeing mass capitulation. Then there's the second camp, okay? This is the camp that's the opposite camp, frankly. It's actually the antithetical camp. These people actually take the Fed at the word. They're not going to stop tightening until they crush inflation. So what are you going to do? You got to circle wagons around the companies that thrive in low inflation, low growth, or even negative growth scenarios, like Eli Lilly and Johnson & Johnson. See, Big Pharma is more or less recession-proof. Lilly has the potential for not one, but two blockbuster drugs, and we're talking more kind of really mega blockbusters. The first is Mounjaro. It's a treatment for diabetes that doubles as a weight loss pill. It probably get approved for weight loss pretty soon, though many people are already taking it off label. There will also be trials for lowering blood pressure and for cutting down on heavy drinking, because it can cut down your craving for alcohol. Now, we really don't know how it works, but here's what it does. It makes heavy drinkers feel like it's 8 a.m., not 8 p.m., meaning it isn't time for a drink. Lilly has a ton of money and is putting up factories to produce this drug like there's no tomorrow. I think it would be the best-selling drug of all time, thanks to the obesity epidemic. Then Lilly has an Alzheimer's treatment that I think is just as good, if not better, than Biogen's. That's next year's business. J&J, they got a series of valuable drug franchises, but on top of that, there's the medical device business. It's now thriving because there's a huge backlog of people going to the hospital for non-urgent surgery now that COVID's been conquered. How strong is the buying? Well, given that J&J stock has been battered for a year by accusations that they knowingly sold talc with asbestos in it, I think the buying here is a strong statement that these people feel the Fed could do more damage to the economy, so it's worth the risk of the lawsuits just to own this otherwise very safe company. Hey, you know what? You can straddle both camps. We own Caterpillar and Lilly and J&J for the Chapel Trust. I believe in diversification. If you want to know more about how diversification really works, please join the Investing Club. We just convened a huge online meeting about these topics. The third camp. This is the third camp, and this one was very exciting right here on the floor of the exchange. This was it. The third camp says that today we just have one of the most successful IPOs of all time, with Mediterranean restaurant chain Cava coming public and doubling right out of the gate. Don't you want to double? We have a Cava down the block here on Wall Street. I told you the other day, the office loves it. There aren't, by the way, the people in the office, they're not the only ones who like it, because the line's consistently out the door. Turns out this Mediterranean food is loved by many, not just regionally in the Mid-Atlantic, but nationally. That's the best kind of long-lasting restaurant story stock, so it made sense to double right out of the gate. Although I told you, you got to be careful. Remember, when you catch a double, I always say you ring the register. But the buyers, you see, the buyers who are in this, well, the ones who are drawn to Cava, you know what they're really drawn by? They're drawn by FOMO, right? They know money's being made, and they don't want to sit it out. Look for a slew of hot deals now that Cava's come out the chute. This is an advertisement that says, come back to the casino. Come back to the casino. It's mesmerizing. It's hallucinating. It works. Final camp, the money managers who bet that this market has to go down because we're supposed to go into recession, right? And they are really dying. They're short Caterpillar, like I mentioned before, and now they realize that those short positions are going to wreck their performance for the year. They're running out of reasons to be short, and their clients are running out of patience with them. The one group that's not being bought aggressively right here is tech, because those tech stocks have already had a huge run, and some people feel that they've peaked. I think that makes sense, but I still think tech can at least tread water while other groups play catch up. And I don't expect tech to suffer long because, for instance, we just had an amazing quarter from Adobe, which many people were short because it had been going up for a long time. And we had a beautiful quarter from Oracle where people are still shorting it. They're crazy. We're going to speak to Adobe later tonight. They make me very confident that we are not done with the phenomenal tech quarters. Bottom line, when you put these four often contradictory groups of buyers together, you can get a magnificent run across the board like we had today. Ultimately, maybe only one camp can really be right. But in the interim, as the bets are being made, almost every kind of stock is going higher. Eric in Michigan. Eric.
Jim, how you doing today?
Eric, I'm telling you, every stock going higher kind of makes me like the market. What's going on?
Real good. I'm calling on Uber today, Jim. I had a question. I knew it hit a new 52-week high today. I wanted to get your short and long-term outlook on the stock. Do you think we can continue going higher?
Yes, I think that Uber has, look, Lyft reported decent numbers, but I think Uber has a number of things going for it. And you know what? It really did kind of win. And I like a winner in a space. Uber triumphed. Why? Great management. All right. Everyone who's buying in the market recently, well, it's looking like a genius. Sooner or later, not everybody will be, but right now, ka-ching, ka-ching. Oh, man, money tonight. The EU charged Google with anti-competitive practices in the ad tech business yesterday, so I'm checking in with a smaller ad tech player that competes with them, Cramer, get a better sense of what could be happening. Then Lennar painted a rosy picture for what's to come in the quarterly report. But should investors take some profits at today's pop, or maybe let it ride? I'm digging the story. And Adobe reported after the bell. I'm going to go through it and find out what it means for Adobe and for the whole market with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.